AML Shop, yeah. AML Shop, yeah. AML Shop, yeah.
Okay, so I want to just set the stage a little bit here. We're going to be talking from both the fintech perspective and the financial institution perspective throughout this throughout this discussion. This slide here just sort of sets the stage in terms of how we got here. The financial institutions benefited from very high ratings with respect to customer trust and appreciation for their sound customer service. However, around 2007, 2008, this did take a little bit of a hit with the financial crisis. Some of that trust was eroded. Not completely, they still are trusted, but opened enough to have people, there are other alternatives. And then as we moved into the 2010s, we start seeing the whole world becoming more digital, and particularly the opportunity to provide financial services digitally. And this is where some really tremendous fintechs began coming to market, usually with a specific, very specific offering, often addressing a specific group. But then gradually, as they grew, rebundled services, there began to be an opportunity recognized to work and partner with financial institutions, essentially where they would bring their advanced technology, their innovation, their nimble business models to the financial institutions. And financial institutions began recognizing that there was a lot for them to benefit from. Basically, a recognition that they're getting faster, anytime, anywhere experience, increasing their innovation cycle time, getting to market faster at a lower cost. And as everyone's fighting for really great talent in the financial services and technology space, working with a fintech gave financial institutions access to some really great talent, filling out some of the gaps that they were beginning to see. Gradually, fintechs, particularly the large institutions, begin pulling different technologies through these partnerships with fintechs. Their expertise then becomes around how do we bundle these products together? How do we orchestrate? So rather than focusing singularly on siloed products, this gave them the opportunity to focus their strategy around bringing them together in a manner that best serves their customers. The fintech then is leveraging the license. They're leveraging the deep customer base. They're leveraging the data and the reputation of the specific brands. So both parties are gaining significant benefit, and we really see an extension of further and further partnership opportunities. Smaller institutions have been a really interesting area to watch, and not just in this market, looking at other markets where embedded finance, banking as a service has really taken hold much more quickly. Smaller institutions, first of all, are faced with extreme competition from both large banks as well as the fintechs themselves. So they're really caught. The fintechs are addressing segments that used to be sort of the sweet spot of the smaller institutions, such as SME or small, medium-sized enterprise. So there was a need to join in. The other consideration is the smaller, more local institutions are not as dependent on on making sure their brand is front and center out there. If they were to try and compete with the big banks, they can't afford to invest in the marketing and the branding to be able to get the brand awareness. So they are more open to the idea of working with a fintech, supporting them in ideas such as embedded finance or banking as a service or BIN sponsorship, where their brand no longer is primary. What we do see is then another burst in digitization of financial services as COVID hits, and then everything's really skyrocketing. But on the other hand, funding's dropping. So we'll see here, overlaid on that same timeline, that the number of partnerships just keeps growing and growing. But you're seeing in the most recent years a drop in funding for the fintechs. And what that means is essentially that the partnerships with the financial institution becomes that much greater, where their traditional focus on growth over profit, because with the VC funding they had a bit more time. Now they're needing to find alternative ways to get to market and to fund that growth, and those partnerships are a great opportunity there. So again, pushing that blue line even further out.
AML shop, yeah. AML shop, yeah. AML shop, yeah.